Imagine a world where the economic stability of the United States is at the mercy of foreign nations. As the global superpower, America's economy thrives on its massive borrowing. But what if the nations holding U.S. debt decided to play a dangerous game? Let's dive into the complexities of U.S. debt, the countries that own it, and how global tensions could lead to a financial shockwave. U.S. Secretary of Defense Pete Hegseth is in Japan on a mission that highlights the growing tensions with China. Sent by President Trump, his task is clear: prepare for potential conflict. Meanwhile, in a strategic move, China has raised tariffs on American goods to 125%. Trump has retaliated with even harsher tariffs, opening the door to talks. But one thing is clear: trade wars are intensifying. But beneath the surface of these political skirmishes lies a much bigger question. Who holds America's debt, and how could it impact the global economy? The U.S. debt landscape. The U.S. has long been the cornerstone of global finance, with its Treasury bonds being viewed as the ultimate safe haven. Investors around the world flock to U.S. debt as a reliable store of value, making it a cornerstone of global financial markets. But the world is changing. Rising protectionism, trade wars, and geopolitical tensions top foreign creditors. First on the list is Japan, holding a staggering $1.9 trillion in U.S. bonds. For years, Japan has been the top buyer, thanks to its low interest rates and a stable economy. Japan's role as the largest foreign holder of U.S. debt is not just economic, it's a strategic partnership, helping stabilize the relationship between the U.S. and Japan. Next, we have China, with roughly $870 billion to $1 trillion in U.S. bonds. China's position fluctuates due to trade wars and its efforts to diversify reserves. China continues to hold a substantial amount of U.S. debt, which provides the U.S. with critical financing. However, there's a looming risk. In a worst-case scenario, China could sell off its bonds, putting immense pressure on the U.S. economy. It's a double-edged sword, though, as such a move would also harm China's financial position. The United Kingdom, Luxembourg, and Ireland also hold significant portions of U.S. debt. These financial hubs manage billions of dollars in U.S. bonds, with Luxembourg holding around $330 billion and Ireland around $320 billion. These nations serve as key gateways for global funds, and their financial strategies are closely tied to the U.S. economy. The potential consequences of selling U.S. debt. Now let's explore the real-world impact if these countries decided to reduce their holdings of U.S. debt. If China or Japan were to start selling, it could trigger a sharp rise in U.S. interest rates. The U.S. government would face higher borrowing costs, which could lead to a slowdown in the economy. The ripple effect would be felt globally, from stock market fluctuations to a weakening dollar. But here's the catch: no one wins in this scenario. Countries like China and Japan would face significant losses on their remaining U.S. bonds, and the global economy would experience a turbulent period. The real question becomes, how much influence does this debt give these foreign powers? Could they use it as a political weapon, or does global interdependence prevent such a drastic move? Drop your thoughts in the comments, and don't forget like and subscribe for the latest updates on global politics.